because this ain't stopping. This is the fastest adoption of any technology in all recorded history. It's growing at twice the speed of the internet with the same number of users back in 1997. And we go from 130, 140 million users now to 1 billion in 2024.
All right, welcome back everybody to Altcoin Daily. My name's Austin, here with Aaron. Awesome guest today. We have a man heavily respected in traditional finance, more recently got into cryptocurrency, used to operate one of the top global macro hedge funds, and now the co-founder of Real Vision, a platform for finance and cryptocurrency content and interviews. Raoul Pal, thanks for joining us.
It's great to be here. Thank you for having me.
Absolutely, man. How's it going in your neck of the woods?
It's not too bad. It's summer in the Caribbean, so hot and sticky and a bit rainy, but otherwise pretty good. I can't complain.
Very cool. I just want to start with sort of a big general outlook for even the people that aren't as familiar with your thoughts on cryptocurrency. What is your cryptocurrency investor thesis in 2021, and has it changed at all since inception?
No, I first got into this space probably back in 2013. When I understood, my job is to analyze the global economy and make investments based on that. That's what macro investing is. And I had realized from about 2000 onwards that there was a debt super cycle being driven, and that both households, governments, corporations, everybody was building more and more debt up. And this was going to sow the seeds for something much larger and quite ugly. Now, that came to pass in 2008. It started. We almost took down the world's financial system. But it got saved at the last minute by this new methodology the central banks have brought about called quantitative easing, which is basically money printed, a different name, which is, oh my God, we've got a huge hole in the financial system. Let's just jam it with new money that didn't exist before. So that then repeated in 2012 when Europe almost blew up, and they saved the day again. So my thesis was, well, you know what? The next time we get a recession, it's probably going to happen again. And every time we're going to have to do more because the system is more and more fragile. There's more and more debt. And lo and behold, last year came the mother of all recessions, and they threw so much money at it that on paper, the recession only lasted 2 months, but it was the deepest in all recorded history. But they basically threw tens of trillions of dollars of printing into the system. Now, what does that really do? There's two issues here. One is the more you make something, the more you create excess supply of something, the less value it has. So, if there's a particular piece of art, it's worth X. If it's a print of that piece of art and there's a million of them, it's worth the cost of the paper plus, a few of the people who sell it, the middlemen involved. So that's what, scarcity versus supply. So that issue's going on where the supply of money means the value of money's falling. And you can see it because your dollar buys you less of the S&P or less gold or less cryptocurrency or less real estate, right? You're poorer in terms of those investments. But the other thing is the financial system, if it's so big and so fragile, what happens if it does really blow up? Well, we need something else. We can't keep papering over the cracks, as we've learned. So I realized that Bitcoin initially, and then the crypto world, was basically the answer to these two things. How do I stop the value of my money going down? And how do I have a safety in a new financial system that is more robust? And that has always been my framework. And then around it, it's all about network effects. Is what is so clever about Bitcoin that changed the game is we discovered after the internet the rise of network businesses. Facebook being a classic example, right? They give you this ability to network with all of your friends and family, and then businesses can then use you on the network and sell to you, and you create this network that has a lot of value. Now, we only get the value because your friend is on Instagram or whatever, but the shareholders got the value in Facebook shares. but you and I as users didn't. Bitcoin put the two together. If you are part of the network, you own Bitcoin. And the value of the network goes up from more people using it and the interconnectedness on the network, the value of the network goes up. Okay, this is a supercharged business model, which makes it exponential in its rise. And that whole space has been brought up upon that. So now we've got the macro thesis, the lowering of the value of your money, you basically getting poorer, and the risk of the financial system blowing up. And now we've got this way of valuing it, which is, oh my God, if everybody starts joining this and migrating across to this new system, it's going to go up in value and we're going to make a lot of money out of it too. That's basically the core thesis.
I like it. So when you're looking at these protocols and you're weighing Metcalfe's law, you know, the number of users on the network is proportional to the value of the network. How do you weigh censorship resistance or permissionlessness in that investor's thesis? I mean, we're still so early in all of this, you know, everything's pretty young right now, but is that an important part of your investor's thesis?
No, there is a philosophical part that many people want: privacy and different things, right? Different people have different requirements. I'm an investor. I get the philosophical side and I err towards that, the decentralization of the world, but I'm also an investor. You know, at core, what do I want to do? I want to make sure that my family is protected and can generate wealth. And the people around me are my friends, you know, that's really what I care about. So then I'm looking for, okay, what is a real network effect? Because there's network effects is just not the number of people who own the token. So Doge, for example, has a lot of token holders. Does it have a network? Not yet. Could it have a network? Sure. Now, that's what Elon Musk has basically pointed out. He's like, if I could create use case for this, it's going to have millions of users and a use case. Then you create a proper network. Now, when you're talking about Ethereum, clearly got ridiculous network effects. And then almost everything else lies in the middle. And some of them will never get the network effects that we want, or maybe they deserve. It just happens that way. And others will, and maybe for the wrong reasons. So, you know, it's a complicated world, but it's kind of interesting and fun.
Totally. And, you know, the chart you put out, you know, regarding Ethereum's network effect versus Bitcoin's network effect, really great stuff. And like Bitcoin and Ethereum have the biggest network effects, the most Metcalfe's law by far. Is there another protocol you're looking at that you think, damn, this network effect, this Metcalfe's law for this protocol, this is kind of interesting to me?
I don't really focus massively on a lot of them, but I notice, for example, Solana, a lot of use case. You know, we're seeing Terra, you know, Luna, there's a lot of use case happening. There's different things being built on top of it. You know, we saw it with even the Binance token, you know. So there's some interesting stuff like a lot of the interoperable stuff like Polkadot and stuff like that. That gets interesting. Chain, interesting for different reasons, less retail-y, more use casey. So there's a lot of that. I think the really big stuff is to come, and that's going to come out of communities and other stuff. So we're still very early. We can't really tell what's going to win in the end. But I know that there's certain macro bets that are likely to win, right? Bitcoin, one. Ethereum, another. I think we're going to see, obviously, DeFi is another. NFTs, we don't know what platform and how the hell that's going to work, but that space is going to grow. Community and social tokens, that's going to grow. And interoperability, that's going to grow. Which ones? I don't know. That's the game like saying what stock in the S&P is going to be the best performer over the next 10 years. I don't know.
True. When you see Gary Vee spend $3.7 million on a CryptoPunk NFT, what do you think?
I'm very interested in NFTs. I'm very interested in digital scarcity. I understand that it is also kind of being a member of a club. Don't forget, wind back 20 years and Banksy was doing spray painting walls and people were like, who the hell's this guy and why is this stuff valuable? You know, Banksy's art's now worth fortunes as the highest paid graffiti artist in all history. So we can't judge that. the question is where does that space go? Is Gary V making a statement about CryptoPunks, or is he making a statement about VFriends? And it's more likely about VFriends. Is if I perceive there to be value and I signal it to my 10 million followers, well, will my 10 million followers now get to understand that VFriends is something that he passionately believes in and wants to drive network effects? That's fair. So he's using basically a $3.5 million investment or whatever it is. That's marketing. Now, is he going to lose all of his money? No. So he pays $1.5 million of marketing to market VFriends. Pretty smart. So you need to you need to think about what people's motivations are, because they're not always what you think they are.
Do you own any NFTs? Have you ever purchased one?
No, I haven't, because I can't decide what has value to me. Now, you know, whether it's the Bored Ape Yacht Club or, you know, the punks or whatever, they're not my movement. They're not my thing. And I'll more than happily look back in 5 years' time and go, Christ, why did, you know, I didn't buy any Banksy and I didn't buy any, you know, Bored Ape Yacht Club. I'm such an idiot. But so be it. And, you know, I don't know what's going to come out of this space, but that's going to be amazing. What I'm really interested in is the fact that NFTs start with art, but they're going to be a lot more than that. And that's really where the interest lies.
I like it. I really liked your interview you did with Camilla on the Defiant podcast, talking about how you think social tokens might be even bigger than decentralized finance. Which social token platform do you think is doing it right? We have Rallies, we have XCAD, we have Chiliz. And how do you weigh social token platforms versus social tokens, which are still so early?
The problem is this is all early, because as you said, there's basically about 2 or 3 platforms of any size, probably 2 of any size, which is Rally and Chiliz. Chiliz has one use case right now, and I interviewed Alex on Real Vision. It's interesting what they're doing, but they're only scratching the surface of communities within clubs. So they're basically launching tokens and hoping the clubs figure this all out. Rally has built a kind of state-of-the-art platform, and I'm really impressed with what they've done. They've as yet got nobody gigantic on it, but my guess is that will come. And my guess is the football clubs, the soccer clubs, and everybody else, they will develop deeper things, and we'll see more community platforms. But really, it's when some of those tokens come, like when Disney launches a token, how much is that worth? When, you know, XYZ megastar launches a token and gives you some community rights plus IP rights, and, you know, what are those things worth? We don't know, but they're going to be gigantic because culture has become an investment. And that is what is happening. But also not at just cultural level, like musicians and pop stars and brands like Louis Vuitton or Gucci or whatever it may be, or Adidas or Nike, whatever. It's also businesses, people like Real Vision. We have a massive community that's passionate about what we do, and we should tokenize because it aligns everybody's incentives. We want our users to benefit from the network growing, and we want to benefit from them benefiting from the network growing, because they're going to go out and say, look, more people should join this. So I think we're going to see it across everything. So it's going to start with the obvious places, which is music and media. And before you know it, I think Facebook is basically doing that with the DM token. It's just not driven by the economics, but it's creating a currency for every Facebook user, which is 3.5 billion. Okay, that's a big, big deal.
How close is Real Vision to launching a social token?
Not close enough. I kind of know what we need to do, but I need to embed it in the website. So you need to into the tech. So you need to make sure that every time you upgrade, you get tokens. Every time you do this, you get tokens. So I'm on that path. I need the tech team to clear a lot of their backlog of what they're doing before I can start getting that on board. And I'm going to try and fast track it. But it's coming. I just don't know how fast I can get it done. Now, we'll probably, and the right way to do it is don't develop a massive token ecosystem to start with. Just start with some simple use cases. You know, how do you own tokens? How do you airdrop tokens? Just some simple use cases, and then build from there, as then you can build some real value. Because the one thing you cannot do is extract value from a community. And we've seen that with some of these kind of pop stars and other businesses selling NFTs And all they've done is just take money out of the community for too much money, and the community's pissed off. The right answer is to build value, alignment and value, so they feel like this is really worth it. Then it's different. Then everybody makes money out of it.
Hey, what's up, everybody? This is Austin. I want to briefly interrupt this awesome podcast and give a big shout out to Real Vision. Raoul and his team have recently launched Real Vision Crypto, as they put it, the world's premier cryptocurrency and digital assets video channel. Head on over, link down below in the video description, to realvision.com/crypto. They are helping well over 100,000 members already understand this market. And 5 times a week, they bring us the most brilliant minds in finance and crypto, including Vitalik, Gary Vee, Caitlin Long, the Winklevoss twins, and so many more. Best of all, it's free. To secure your free membership to Real Vision Crypto, link down below, check it out, and back to the podcast. I'd love for you to expand a little more on your thoughts on the Cardanos and the Solanas and maybe the BSCs. Let's just say Ethereum 2.0 launches without a hitch. It's perfect. Where do you see those Ethereum interoperators or more scalable versions? Where do you see them if ETH2 is good?
The answer is that I don't know, but usually there are different people who want to use different things because they're cheaper, they're quicker, it's easier, less regulated, whatever the answer is. And that's why we don't all coalesce around one. Now, can there be 10 ETH competitors? No. Can there be 4 or 5? For sure. Because that's pretty standard stuff. Like, how many PC manufacturers are there? I mean, basically a bloody PC is a PC. And then there's a Mac, so there's basically 2 systems. But PCs, how many manufacturers are there? There is a bunch of them. And you use different ones for different reasons. So I think it's the same kind of thing.
Cool.
Do you think that Cardano is equally a part of the conversation as some of these other networks that actually have people, using them?
No, I mean, I own a bit of it, but I don't think so yet. I see a one-sided network effect still. I know there's the African deal and stuff, but you can buy stuff like that. The reality is how much actual interconnection between all of the people on the network, applications being built on it, there's not enough yet. And that's okay. We don't know the answer, but we have to be honest with ourselves and say, okay, well, we'll give it 5 years. And if in 5 years it doesn't really take off, then the token's not going to be worth as much as it is today. Now, will it be worth 0? No.
So Bitcoin and Ethereum, and I believe Ethereum weighted even more so, are the 2 biggest coins in your portfolio. What is the third coin in your portfolio? Interesting
enough, how I did this was I chose Bitcoin and Ethereum, and I switched, I started with Bitcoin, I then added Ethereum, I then switched. Then I just did an equally weighted basket of a bunch of all the other protocols, DeFi, other stuff. So whatever ends up appreciating the most at any one point will have the highest weighting. But I've not made a macro bet on a single other one. Then I've started taking macro bets on social tokens. But these are smaller, less liquid things. So you can't take a huge value of your portfolio because it's very early. So as a risk thing, I'm like, yes, I want some social tokens and I want a bit of the metaverse too. So that's how I've constructed it. So I don't have any difference in weighting in my head between Cardano, Polkadot, Aave, any of this stuff. And they're all different things, different use cases. But I said, look, I don't know. I'm not smart enough and it's not my job. I mean, I don't do it with the S&P 500. I'll just buy the market if I'm trying to express the market view.
Would you mind sharing some of those smaller tokens you own, or if you don't want to, that's perfect.
I try not to do on the small stuff because you get accused of being a shill.
Okay.
Right. And
for sure.
And then it just makes my life more complicated on social media because people think I've got an axe to grind and that everything I say is then about driving my own bags. So I don't do that. And I've been pretty honest. I said, like, people say, well, what about XYZ? I'm like, yeah, I own it as part of a basket. So I don't really care about it, but I'm watching it and I'm interested in it, but I don't really care. I really care about Ethereum. I really care about Bitcoin. I don't really do care about the social stuff, but I won't talk about what I'm doing in it because I don't want to be that guy.
That's fair. Believe me, I get it. I want to zoom out more of a bigger picture. For a new cryptocurrency investor, what's maybe the biggest piece of advice you would give somebody entering the crypto space today?
The piece of advice is, what do you want out of it? What are you looking to do? How old are you? What is your risk tolerance? Are you looking to learn? Do you want to figure out how markets work and this looks interesting to you? Well, then decide, okay, in that case, don't go all in. Just put a bit of money in and get a feel for it. Get an understanding of what these different things are, what project really works for you, and enjoy the process of learning, losing money, making money, being the dumbass, and then thinking you're a hero and then realizing you're not. All the things that every person who ever invests has to go through, do it and enjoy it. And if you can write notes so you actually learn, it's really, really useful. If on the other hand, you're saying, okay, what I want to do is I want to get exposure to this space because I want a long-term investment. I want to build a significant thing like I would have done to my 401k or in addition to my 401k, then that's a different conversation. Then what you would do is start looking for portfolio allocation, which is, okay, safety first. You want the highest quality product with most of your money in it. So that would be Bitcoin. And then you probably want Ethereum, a decent size because the network effect and its use cases are so enormous. And then after that, you start thinking like I'm thinking. It's like, what do I know about the next part of this? Do I have any informational edge? Do I just buy the Bitwise 10 and just do that? Is that a smarter way of getting that investment? Probably. And then maybe in a couple of years' time, when you're starting to understand areas that really excite you, it might have been DeFi, it might be social tokens, it might be anything, it might be NFTs, that you can start then allocating a bit more of your own money into those bets. So that's how I play it. It really depends what kind of thing you're trying to get out of it. You can get both out of it as well. You can put your regular dollar cost averaging plus a few lump sums in as you go, and you can have a trading account and lose all the money and be the complete ape. And that's okay. You can be both.
Let's say you weren't the successful businessman and investor that you are. Let's say you had a risk profile of you're relatively young and you don't have a lot of money, maybe $1,000, but you wanted to take advantage of hopefully the best part of the rest of this bull run. How would you turn $1,000 into $1 million? Like, what would you do if you had nothing?
You never start an equation with that, right? That's just not investing. What you're doing there is wildly speculating in the desperate hope you're going to make money. The answer is, what you should be saying is, how can I maximize the return out of my $1,000 without losing it all? So will Bitcoin go up as much as Ethereum over this cycle? I don't know. Are either of these going to go to zero? No chance. Can I write my $1,000 off and say, I don't care, I'm going to flip it into Doge? Fine, you're just speculating. So, there is no get rich quick. It doesn't work in this world. That's just pure gambling. And you might as well just go to Vegas with your $1,000. So the answer is, you can never approach it that way.
I appreciate it. Keeping me level-headed. I like it.
Yes, for sure.
Because whenever, honestly, and we've all done it, I can make this out of this position. Almost always guarantees you never do, and you generally lose money because you're just coming about it in the wrong way.
Very reasonable. I love it. You put out an interesting tweet the other day on if Tether implodes to zero, what would happen? Could you maybe sum up if that is a real fear of yours and just how you worded that tweet on what may happen?
I looked at Tether in 2018, and why I got into looking at Tether was that the Bitcoin price was completely flat for a period of time, and I'd seen that price pattern before, and that's usually a peg about to break in a currency. And I'm like, there's an abnormal buyer here, and it ended up, I think, being Bitfinex, and trying to defend its portfolio at that point when suddenly lost $800 million and all of this stuff. So I got into this, and then you hear all the stories about what's Tether really worth. It's not one for one. And that sounds scary at first. Oh my God. And then look at their portfolio. They announce what they've gotten. Oh my God, 25% of it is not in US treasuries. They could lose 100% of everything, and all the other positions, and it'd be down 25%. Okay. Now, that's the most extreme example possible. Generally speaking, what is the risk? Down 10%? Okay, so let's say 10%. That's a reasonable risk, that it's 10% less valuable than the market thinks it is. Well, firstly, it's not fixed at 1-to-1. It trades at 1-to-1. It moves around. And if you look at what Tether is used for, it's used for various people with various needs for an instant currency. And a lot of it is Asian trade and exchanges. The Asian countries that use it, well, they're using it because it's really expensive to do like a Malaysian ringgit RMB currency transaction and get approval from the central bank and blah, blah, blah. That's usually costing them like 12%. So a stable coin with a 10% risk, and that risk is only going to happen once, is always going to be a better option. And they can hold their money in it and get a yield. So if your downside's 10% and you get that back in a year and a half in yield, then you're more than compensated for the risk. So for that reason alone, I worry about it less. But the other reason, let's say I'm the idiot and it goes to zero. So what happens next? The crypto market falls, what, 50%? Oh my God. We've just had 80% sell-off in half of DeFi. And what happened? Nothing. I don't remember seeing you crying. I don't remember anything happening. I don't remember the central bank bailing anybody out. People on Twitter kind of like, oh, here we go. A bunch of leverage got washed out and nobody cried. Okay, so Tether, the market goes down 50%. Nobody cares because the network effect is still going on, because what happens over time is people move away from Tether and use USDC or Paxos or whatever they choose to be a better representation of the risk that they're prepared to carry. So I just don't get it. I don't get what it's all about. So it's not about Tether, because if you actually mathematically calculate it out, the risk is not that big. Of course there is risk. I'm not saying these are great actors. What I'm saying is it's pretty understandable risk, which is why the market is comfortable with it. What's actually going on is people expressing their fear of technology and the technology of cryptocurrencies. So when you dig into who is talking about Tether, most of them are generally people who err towards gold value investing, things that they understood from their lifetimes to be of value. And that's okay. But what they're doing is attacking something else out of their own fear of it. I don't understand it. The world has changed. This must be all wrong. And I get it. Once you look at a psychological level, I get it. People are freaking out by technology. It's replacing jobs everywhere. People are freaking out about a fucking vaccine because guess what? It's RNA. And this is going to change the world. And it's technology. And they're scared. I get it. People are scared over AI. They're scared over all of this stuff. What is this Tesla thing? The anger about Tesla, it's fear over technology. It's fear about the thing that I knew, petrol cars, Detroit, this whole thing about car racing and what makes a man, right? That's all being tested. And then what? Autonomous vehicles? What? I'm a man. Like every man, as you know, thinks they're a better driver than everybody else, right? So you're now questioning, what is a human's role in a car? And then you're saying, oh, and the car can make better decisions than you in how to get there. Okay, I'm not comfortable with that. Technology, this is making me feel insecure. So guess what? I hate Tesla. And people won't really even acknowledge this, but it's pure psychology. And it's only going to get worse as technology more and more exponential over the next decade. We are all going to feel scared at various points. Well, I don't understand this. I'm not comfortable with this. I remember when they cloned the first sheep in the UK, Dolly, everybody freaked out. Then 5 years later, they're cloning all sorts of stuff. And then suddenly a Chinese scientist clones two twins in China, right? Less uproar, less than there was about sheep. And slowly these things happen. I know people don't like it. I know everybody thinks this is a dystopian future. Maybe it is, maybe it's utopian, but it's not going to stop. So you can be scared all you want, or you can embrace it and try and make money from it, because we've got one life and technological change is going to happen, whatever we think, however scared we are of it. And that applies to cryptocurrencies too. This is why everybody is freaking out. This is why the central banks are freaking out. It's not about crypto per se or Bitcoin. It's like, oh my God, we're handing the keys over to the future of the financial system to this distributed mass of people driven by a technology of which we have no influence over. Stop this, please. While the rest of us are going, actually, this is really interesting because it's a different fight now and there's a lot of benefits that we can see. This is happening everywhere.
Interesting. I love the perspective. Raoul, what is a question that you wish that you got asked more? Like, you do a lot of interviews, people have their agendas. What are you sort of interested in that you wish more people were talking about?
There's a couple of things that I think are important to me. One is an open mind. The issue with this space is if you decide some network is your thing and you invest your $1,000 that you think is going to go to $1 million, you're now going to go on Twitter and every place fighting for your network. And that's good and also bad. You can fight for your network and be inclusive. I don't like the fractionalization of everybody. Everybody's fracturing into small tribes because they think it's good for their own position and for their thing, but it's a bigger picture out there. It's a big world out there. And I just don't get it why people are doing this, because they're turning people off. The amount of people who got turned off Bitcoin in the last 9 months is astonishing. I mean, I've got various points where I've just thought, you know what, I'm just going to sell my Bitcoin. I just don't give a shit anymore because this group is so toxic. And it happens elsewhere in many other tokens. And it's just not right. So that's one thing that I really observe. And the other thing I'm really passionate about in getting people to understand how to take risk. You know, because buying a small, unknown, newly issued token is not the same as buying Bitcoin. And the Bitcoin people will say, they're all scams. No, they're not. These are VC projects, some of which will be scams, as every company and every walk of life. But these are new projects. And we don't know if they're going to succeed. And that's okay. It's like real-time mark-to-market VC. And anybody who's built a business knows that your business is worth zero half the time. Half the time you think you're going to get rich, and half the time you think, oh, I'm going broke. And until it finally gets traction. That's normal. So you need to allocate according to the risk you're taking. Now, you may be the really, really smart person who really knows their space and really knows the network effects and the possibilities, and you'll take a larger bet. And that's okay. But, you know, it's teaching people how to use risk management, because so many people into this space are new to investing. And that's cool. But just understand some basics about where to be happy to lose money and where to be happy not to lose money. And I'm not even talking about trading. I'm just like, you won't lose as much money in Bitcoin as you will lose if you get it wrong in a small token. So you don't put the same amount of money in each. And, you know, I think that lesson for people is a huge lesson to learn.
I totally know what you mean with, you know, sometimes the toxicity or the maximalism for any specific project gets kind of annoying. I don't think the Bitcoin toxic, you know, most Bitcoiners are cool. I don't think the toxic Bitcoin maximalists, especially they were like very loud in the bear market. Then as we got into this bull market in the beginning of the year, I don't think they were doing themselves any favors with some of that rhetoric. But then we get into this bull market, and now these like low cap altcoin gems or coins, they're like even more toxic, and they have no fundamentals. And it's just like, damn, like, too many people are just like so narrow-minded on their one thing and won't even, you know.
And if what you're trying to do, so this is again psychology. So most people, if they're really scared of something, make that fear happen. And their fear is their token is going to be looked by everybody else, and they're going to invest in something else instead, and the capital flows won't flow into their project. So then they start defending it. And then what happens is they get really toxic in defending it, and it actually stops the capital flows coming in. It's psychology. People do this all the time in life. The thing you fear, you make happen because you fear it so much. And this is what is happening in the crypto space. People are just not cool about how adoption works, which is be inclusive. If you are exclusive and call everybody a scammer or an idiot who doesn't get your particular idea, then you will only push people away and you will increase the probability of failure. So they do the opposite. And I think that's one of the reasons why Ethereum has been outperforming Bitcoin, because a lot of people just said, I'm not interested. Even though Bitcoin is absolutely incredible, it's like impeccable in what it does. It's faultless, but the community is not faultless. And no communities are. But if they were just a bit more open-minded and broader, like the best people in that space are, and they can still be Bitcoin maximalists, I have no issue with their view, just be nice to people. It's not that difficult just to be nice to people and say, yeah, I get your views different to mine. You know, I kind of think that the world's going to move towards Bitcoin as the underlying for everything, and we can all be built here. It may take a little bit longer. That's a lovely way of expressing it, as opposed to, you stupid coining scammer. I mean, that's wrong.
Yeah, and then some. And again, like, most people are cool, but like, then just, you know, some of them, you know, talked about, oh my God, these altcoiners, all they care about is like the marketing, and they're just being nice because they want you to, like, you know, buy into their coin, but we don't need to do that. Bitcoin's above that. It's like, you know, that works. Like, Bitcoiners should be marketing more and should be like nicer, because like all these people coming into the space some of them did get turned off, I think.
Yeah. And look, you know, one of the arguments in the space is, and everybody does it, is that's a con, that's a scam. You know, everyone's a scam. The space needs to do a little bit better in, this is a risky bet, but, you know, the people are pretty good quality and they're trying to solve a good problem here and they got a chance. With these guys are pretty shady characters and we need to be cautious because they're probably just trying to grab your money. Right? Those two things can coexist and they're not the same thing. You know, we've seen the rug pulls in DeFi, and some are accidental rug pulls, right? Because they've got something wrong in the protocol level. And that's okay. We'll forgive them for that. And others just took your money and we don't forgive them. And the community needs to do a better job of those things and say, fine, look, we know there's risk, but we want to split those two risks between a great project that doesn't work and a perceived great project that was a con.
Raoul, my final question is has to do with Ethereum. EIP 1559 is launching in a day or two. By the time this interview airs, it'll be launched. What are your thoughts on EIP 1559?
I just wrote an article about this and I called it the greatest trade in the world.
Please go on.
So you're getting the scoop in Global Macro Investor, my kind of institutional research product. This setup is absolutely brilliant. So the chart pattern was this lovely wedge in Ethereum. The Ethereum chart is following the Bitcoin 2017 chart, which would give it an upside projection of 20,000. Backed that up by the network growth, where Ethereum is growing at about 50 to 60% a year in network growth, and Bitcoin's growing at 30% a year. So this is astonishing growth at scale, right? So this is not an early project. We've got all of the developments with NFTs and DeFi and everything, and social tokens, everything's on Ethereum. The chart of Bitcoin versus Ethereum also is going to give a lot of people to switch. All of this is happening at exactly the same time that 1559 is coming. And then you look at the on-chain analysis. Most people spend the time, like Willy Woo, looking at the stuff on Bitcoin, but very few people actually bother with the on-chain analysis of Ethereum. The reality is the amount that's being staked for ETH 2.0 is going up all the time. It's huge numbers. Then the amount that's being put into DeFi and locked away is huge. Then the stuff that's going off the exchanges into hard wallets is enormous. That has left us with a free float of 13%. And 1559 is now going to reduce the supply somewhat, let's say from 4% to 2%. And it's going to probably lower the gas fees a bit. And with the variable block sizes, help with the speed unblocking of the network. So in which case, more transactions will go through, which will mean more burning. So you've got a massively reduced halving of the supply rate, probably, maybe more. You've got 13% of coins on exchange coming off exchange like at 1% a month, 2% a month. So, another couple of months will be 10%. There's no coins. And like NFTs are just showing you demand is exploding. You're set up for an exponential move here because everything has come together all at one point in time. And tomorrow? No, Thursday is the day. Now, does it mean that all happens in one go? No, don't be silly. We'll have corrections. There'll be like, the rumor sell the facts. See, I told you it was wrong. All of that kind of noise. But generally, you look back by December or March of next year, I think what's going to happen as soon as 1559 goes through, everybody who's got a sizable stake will realize that the price is going up. More people will lock into 2.0 to get the yield. Let's say 2.0 comes out in March. You're going to take all the supply off the market and with record demand, and they're all going to be locked until March. Then probably what happens is 2.0 comes out, everybody unlocks, and the great bullish thing is actually a bearish thing. Exactly like Coinbase was when the moment Coinbase came out, Bitcoin peaked because people had another opportunity. Everyone's like, this is great for the space. In the end, you change the dynamic. So I think the unlock will probably lower the price. But between now and that unlock, oh my God, this is one of the best setups I've ever seen. I think arguably better than Bitcoin in March 2020. You heard it here first.
Nice. Appreciate it. My final question, this is kind of like, it's different for every person. What percentage of your ETH and Bitcoin portfolio do you see yourself selling when you deem we're pretty near the top of the cycle? Is it a lot of it, most of it? Is it a small amount? Is there a
it depends
portion of it you're keeping for like 10 years?
Great question. And obviously we all play around this with our minds, right? The answer is it depends what it's worth, because I've got a few things that I need to spend in fiat. And, I would like to do that. So it depends what it's worth as the percentage what that will be. But there'll be a bunch I will take off to do some stuff in my normal life. And then I'm thinking, okay, do I keep it all in the tokens, or maybe have I got enough money that I can spread it around some hedge funds and some longer term bets? How do I dampen the volatility over a potential down cycle? So I think I would have erred towards taking more of it off. But the more time I spend in this space, the less I think I'll take a lot of it off. I'll just try and structure it in ways that allows me to earn some yield, not worry about it, think about it, make sure I've got the fiat money, the dollars that I need to do the things that I need to do or want to do, and the rest, let it go, because this ain't stopping. This is the fastest adoption of any technology in all recorded history. It's growing at twice the speed of the internet with the same number of users back in 1997. And we go from 130, 140 million users now to 1 billion in 2024. Right. So, that's an 8x in users. If you extrapolate it out, we get to 3 billion pretty fast. And if you look at the other size of other asset classes, the major asset classes, between 100 trillion and 300 trillion each. This is current 1.5 trillion. It sounds like to me it can go up 200x from here, or call it 100x. Let's be conservative. So kind of the ups and downs are all part of it.
Raoul, thank you so much for taking the time, sharing your perspective. The links for you and Real Vision are all down below, but final thoughts for the Altcoin Daily audience.
Firstly, look, Real Vision Crypto, I set it up for a purpose. So realvision.com/crypto. Go there. We interview everybody in the space in depth to give everybody a better understanding. And it's free. So don't miss that opportunity. So that's there for you. And other than that, is just keep an open mind and keep learning.
I love it.
Totally. And I've, you know, in this past year got turned on to Real Vision Crypto. I love it. Great content from you guys.
Yeah, it's really got some unique stuff. We've got some, I mean, Gary V, he's coming. We got an amazing interview with him. You know, so we cover everything. Unlike most people that kind of have one kind of axe to grind, we get the leaders from everything from Cardano to Polkadot to Ethereum, you know, Ethereum to social tokens to metaverse to privacy to, we're agnostic. We want to give the information people need to make these better decisions and to understand this fast moving space.
Yeah, that's similar to us. I mean, we'll talk about the whole entire cryptocurrency market. We can look at Bitcoin and Ethereum, see, or different protocols and see some are way better than others. A lot of them are crap, but yeah, we take a more agnostic, talk about the whole market. Anyway, yeah. Raoul, if you're ever in Los Angeles, let's grab a beer sometime. Thanks for coming on, man.
I'd love to, guys. Take care and thanks very much for having me on.